strategies in cryptocurrencies and ICOs. So if you want to learn to make money, that's all I'm really, really good at is making money. So that's what I'm here for, teach you guys. All right, so if you've been to any of my other talks, this is kind of an evolution of like my trading deck because almost everybody talks about ICOs or they'll talk about raising money for companies. I really, really just focus on trading, and that's all I do. So it's kind of a nice little piece I like to do at the conferences because I find people don't really talk about trading as much, but the reality is every time you buy an ICO, you do something, you're initiating a trade, so I think it's actually pretty important. So first off, raise your hands if you have Bitcoin. That's awesome. About a year ago, that number was probably only 10%. So now raise your hand if you've traded stocks, options, and currencies. Excellent. So you've got a lot more traders in the room. Now, how many people here care about the price of Bitcoin? Okay, how many of you don't care about the price of Bitcoin? Okay, there's two types of people in this world. People who care about the price of Bitcoin and people who lie about it. So you're all liars, all right? Because Bitcoin, the price of Bitcoin is extremely important and cryptocurrencies in general because if you think about the oil and gas industry, oil and gas actually acts as a bellwether for the health of the industry. So the higher the price of Bitcoin, the better it is for the ecosystem. So I've added a couple of extra pieces to my presentation this afternoon. So this is what we're going to go through. I only got 15 minutes, so I'm going to go through this real quick. So first, annual update, Trading 101, fundamental analysis, technical analysis and charting, references, Q&A. And whenever I give talks, I always want to give something back to the audience. So everything that you see here today, you get a copy of the slide deck. You guys can actually use this. These are the same trading strategies we use in our fund and our brokerage. So annual update. What's happened in the last year? Well, last year, March of 2016, Bitcoin was $500, Ethereum was $10. Fast forward 1 year, Bitcoin's $1,200, Ethereum's $20, and as of today, Bitcoin's back at 4,000, Ethereum's close to 300. So if you tell me you don't give a shit about the price of Bitcoin, you're lying, because that's the only reason why all of us are sitting here is because the price is going up. Everybody wants to cash in and want to make money. So I'm going to teach you guys what to do, how to manage your risk in this presentation, because at the end of the day, there's a lot of things that new investors aren't. You just see the price going up, like there's this huge euphoria. So I want to make sure that all of you that are here, you manage your risk correctly. And also, of course, the killer app for Ethereum is ICOs. This is why 2017 has been like a blockbuster year. And it's amazing for all of us that have been here in the industry for such a long time because you get to really, really see the innovations that are happening. And it's also disrupting VC. ICOs are kind of like the new way to raise money. So it was very exciting for us, even working with Blockchain Capital. We could raise $1 million in 12 hours on a Saturday without using any banks or intermediaries. So that, to me, is true democracy and voting with your money. So that's the annual update. That's a nice chart of Bitcoin right there. And people think Bitcoin's actually in a bubble, but that's not entirely accurate. We have a price target right now for about, well, this year it was supposed to only be 3,000, so it's already shattered that. So at the current price trajectory, we expect that Bitcoin could be $10,000 by the end of the year or early next year. Trading 101. Okay, so I'm just going to assume a lot of you here don't have too much trading experience. For the ones that do, this will be a little bit of a refresher for you. So the first thing when you trade is you got to ask yourself the question, where is the price going to be? If the price is too high, you probably shouldn't be buying. If the price is too low, it's a good time to buy and not sell. We're also going to talk a little bit about different ways to trade cryptocurrencies and ICOs. We're going to talk a little bit about terminology and then also trader psychology. So where's the price going to be? Well, everybody just assumes that the price is going to go to the moon. So what's a popular trading strategy? Buy high and sell low. That's what a lot of people do, right? It's called fear, uncertainty, and panic. So the one thing about trading cryptocurrency is you got to have balls. You really, really do, because you have to be able to weather storms of like 20% drops in a single day, and you got to have guts to buy at the dips. So if you guys follow me on Twitter, you'll notice sometimes that's kind of where it gets pretty entertaining when we talk about dead cat bounces, and there's so many amazing short-term trading opportunities with Bitcoin that if you're a true trader, Bitcoin is the most fun thing to trade. It's like the currency markets back in the 60s and 70s. So where's the price going to be? Well, we use it, how do you determine that? Well, we use a combination of fundamental analysis and technical analysis, which I'll explain. And then we'll also talk a little bit about trend following. So ways to trade cryptocurrencies and ICOs. Well, before, for most of you that actually know me here, we used to only trade Bitcoin. And we're like, screw app coins, screw all the shit coins, like we're not dealing with it. And my biggest mistake was I went out to party instead of putting that 40 grand into Ethereum and the ICO, so I admit it. That's like my worst trade. That trade cost me 40 million bucks. But all good, because now there's a lot more opportunity, right? So, but the most exciting thing now is there's a lot more trading pairs that are actually liquid. You have Bitcoin. So the ones that we consider the most liquid and we trade daily in larger volumes is Bitcoin, Ethereum, Litecoin, Ethereum Classic, and EOS. Some of the other coins that you'll also see that are actually picking up steam and have a lot of trading volume is a Zcash, Monero, Dash, and Ripple. Now, I categorize these cryptocurrencies very, very differently than I categorize ERC20 tokens. So what are ERC20 tokens? ERC20 tokens are tokens that are dependent on the Ethereum blockchain. That means so this is like the second wave of what I would call the app coins, or the ICO coins, the tokens. And Augur, where's Jeremy Gardner? Where is he? Raise your hand. Jeremy, that good-looking young guy right there is one of the founders of Augur. He's like one of the first ERC20 tokens. Thank you, Jeremy. And that pretty much sparked a wave of all these other innovative tokens. So for example, Civic, OX, BCAT, BAT, OMG, BAT, Poet, Bancor, TNT, Changebag, Enigma, Polymath. Sounds like an Eminem song, actually. All of these tokens, why I've listed them is that the only reason that a token actually has value is it gives you access. So what does Augur give you? Augur gives you access to the Augur network for prediction. Civic gives you identity access to the identity network that Civic provides. So one of the most important things to look for when we invest in ICOs, that's not our main business, we invest in ICOs, we hold most of them, we don't really trade them out because we believe in the founders, we believe in the people, we believe in the teams behind it. So my best advice when you look at ERC20 tokens and ICOs is number one, look at the team, read their white papers, understand what's going on, but more importantly, liquidity. A lot of these tokens are not very, very liquid on the first couple days. They need to get listed on exchanges. So as somebody that's actually newer to this space, when you buy Bitcoin and Ethereum to invest in these ERC20 tokens, understand that there's going to be a lockup period for you and that sometimes you're not going to be able to trade out of these tokens and your money's going to be locked up. So that's a very, very important thing we like investors and traders to actually be aware of. So there you go. So that's the difference. Okay, ways to make money. We're going to talk about different money-making methods on exchange, over-the-counter, arbitrage, and market making. I'm just going to go through these pretty quickly. So the way you can make money in cryptocurrency, whether it's Bitcoin, Ethereum, or any of these ICOs, buy low and sell high. If you're talking about traditional cryptocurrencies such as Bitcoin or Ethereum, on exchanges such as Bitfinex, you can do margin borrowing, which is essentially you can short. So if you think the price of Bitcoin's too high, you can short it. Futures trading, if you don't want to trade the underlying asset itself and you just want to speculate, use leverage, and kind of gamble a little bit, you can also do futures trading on BitMEX. They're the best derivatives platform. It's a BTC-denominated derivatives exchange. It's not US dollar based. There is another one, but this is more for institutional. It's LedgerX, and they just got approval from CFTC. So these guys are actually creating the first options market for Bitcoin. And that should curb some of the volatility. However, what we're starting to see is that Bitcoin in itself, and one of the reasons why the ETFs didn't get approved for the Winklevi is that Bitcoin is inherently decentralized. So all these cryptocurrencies are decentralized, so it's very, very hard to regulate something where you can't centrally control it. So these are some of the exchanges that we trade on. The last two, Poloniex and Bittrex, these ones are really, really focused more on the ERC20 tokens, altcoins. Typically how we pick exchanges is we have relationships with all of them. So you look at who the venture backing is, and these are just some of the ones we use. There's actually more, but for your reference, these are some of the major exchanges. Over the counter This is just a cool picture, like showing a bunch of cash. But essentially, OTC just means you can buy from somebody in the audience and sell to another person without using an exchange. That's an over-the-counter transaction. So if somebody in the audience wants to trade with you, you give them Bitcoin, they give you cash. That's an OTC transaction. Arbitrage. Arbitrage is one of those very, very unique things that exists with cryptocurrency. By definition, it's the simultaneous buying and selling of the same commodity or currency in one market and selling it in another. So for example, let's just say somebody in the audience here, he has 100 Bitcoins. I'll buy it from him for maybe 4,000. Then, well, you can't sell it in China anymore, so you could sell on an exchange that's maybe selling for 4,100, and there's your arbitrage. And market making, what is market making? Well, what we do is we do a lot of market making. So when you go to an exchange and you buy or sell, somebody has to be the one selling or buying something. So we typically put limit orders on a lot of these exchanges. A lot of times market makers profit from the spread, which is like the bid-ask. And usually you implement algorithmic trading or high-frequency trading when you're doing market making. Okay, terminology. So when you're talking about buying, it's bid, offer, buying or going long. When you're talking about selling, it's ask, sell, or short. So these are actually very, very important terms to know when you're dealing with something. So if somebody's selling, I'm like, okay, they'll be like, oh, what's the offer? And I'm like, okay, what's the ask? So these are important terms. Trader psychology. This is like probably one of the most important things. When you're trading, remember, money's not real. Love is, no. Okay. But money is not real, and trading is like a game. You're playing against other people, so you got to understand the psychology of people. It's very, very important that you cut losses quickly. You learn to cut your losses quickly. Better to be down like 3 or 4% than down 10%, and let your profits run. Don't be scared to let your profits run. Always have an exit strategy. So anytime you enter a trade, make sure you know when you're going to get out and you know the time frame. ATP, always take profits. You're better to take a $10 profit on a trade than a $10 loss, right? So take those profits. Small profits add up to big trades. And ABT, always be trading. It takes 10,000 hours for you to be proficient at something, 40,000 hours for you to become a master. So trade every single day. That's the beauty about crypto. You can start with $500 and you can trade on all these different exchanges. There's no limit to the time that you can trade. Another thing, bulls make money, bears make money, but pigs get slaughtered. You can make money in a bull market when the price goes up. You can make money in a bear market when the price goes down. But anytime you get greedy and you pig out, you're always going to lose, whether you go long or short. Now, fundamental analysis. What is fundamental analysis? Fundamental analysis is in Bitcoin and cryptocurrencies is the study of news analysis and macro events. So Bitcoin is kind of what we would consider a global macro economic alternative assets. It's very, very sensitive to news in the media. So for example, oh, China banned Bitcoin. Oh, China banned ICOs. Oh, China, what is it now? No Bitcoin exchanges, so the price is going to tank. You know what? Anytime China bans something, that's the best time to buy. I'm just telling you right now. Okay? And then Twitter. Follow Twitter. Twitter, there's a lot of people. Twitter's probably one of the best sources of information because, so guys like, Vinny, Jihan, Roger, all these guys that are, key people in the space, even Rand from Crypto Trader, CNBC, and Jeremy Gardner here from Augur. These guys follow their Twitter because they have insights into the market that most people don't have. Most of it are just opinions. They're not trading, but longer term, if you start to see enough people have the same opinion on something, that's a trading signal. Bitcoin Talk and Reddit, those are more for trolls and entertainment. Don't take too much news from there. Research-driven, monitor the PBOC website using Google Translate so that the next ban on something, that's a great way. That's a great trading signal. CoinDesk, Google News, really, really important to always monitor the news. Now, the other 95% of trading is technical analysis and charting. So not every single day there's news about Bitcoin or cryptocurrency that's going to cause the price to drop 20% or go up 20%. So let's talk, the remainder of this talk is about technical analysis. So what is technical analysis? What are the tools, the types of charts and data that we look at, technical indicators, and chart patterns that you should know about? So what is technical analysis? It's the study of charts and patterns to determine where the price of something may go. Now, you guys might have heard this term, a past performance is not indicative of future returns. It's actually true. However, when you're talking about trading and technical analysis, past performance gives you a better indicator of how something may perform. So 99% of the time, the only information we have is the price. And that's the beauty about trading, is that you only care about the price. That's why my existence actually in the crypto community, everybody just asks me, Harry, like, what's the price of Bitcoin? Why is it going up? And I say to them, well, anytime you have more buyers, the price of Bitcoin goes up, and then anytime you have more sellers, the price of Bitcoin goes down. So that's kind of, it's just supply and demand. And then also a self-fulfilling prophecy used by traders. So when you look at a chart pattern, for example, a lot of people are actually afraid to buy at the new highs. Us, we love buying at new highs because that allows you to have a quick profit. So if you see a double top pattern, what's going to happen is we think that this price is going to break new highs. We'll scale into a position. Other traders will also see that volume increases, and then they will continue to buy. And then now what's happened is you've created what's called a self-fulfilling prophecy, and the price continues to go up. That's how new highs are broken up and down. Okay, tools. What tools do you need? So there's software tools, and then there's hardware tools. So one of probably the best sites everybody's here has probably used CryptoWatch. Kraken acquired them last year, I believe. Bitcoin Wisdom, also very, very similar. BFX Data is also one that we recommend you look at because interest rates on borrowing are actually very, very important because the more people that borrow US dollar to buy Bitcoin is usually like a bullish sign because people are like margin trading. And notifications, so that's an example of CryptoWatch. And Jason's looking at me. 20 more seconds? Oh, okay, so BFX Data, I can't really talk that fast, but. Okay, so tools, hardware, that's our trading pit. So you need more televisions because information is just a lot faster when you can see everything. And then trader workstations, types of charts and data, Bitcoin price chart, visual depth and chart. Can I have like 1 more minute? 2 more minutes? Can I have 2 more minutes? Oh, God, okay, good. All right, Jesus Christ. I didn't even know there was a timer on there. Okay. So Bitcoin price chart, this is very, very important to look at. I look at 4 different time periods: 15-minute, hourly, daily, and weekly. And why is this important? Well, if you're day trading, it's important to look at the 15-minute and the hourly. If you're investing for a longer period of time, you need to look at the weekly and the daily as well. But if you look at all these different time periods, whether it's Bitcoin or Litecoin, you start to get a better picture of what's actually going on short-term, mid-term, long-term, and that's actually going to help you become a better trader. So definitely understand how to read Bitcoin price charts in 4 different time periods. This is, how many of you, raise your hand if you've seen this chart and you're like, what the hell is this? Okay, good. So most of you. So this is actually a very, very unique chart to cryptocurrency. This is a visual depth of the order book. So everything on the right, on the red, that's all the buyers that are available on an exchange. Everything that's green is everything that's available for selling on an exchange. So let's just say that Bitstamp, I want to buy 100 Bitcoin. Well, if I want to buy 100 Bitcoin, but at $4,000, there's only 20 Bitcoin available, let's just say on the green side, I have to actually execute a market buy, and you're basically taking out all these other orders, and what ends up happening is that's what's called slippage. So it's very, very important to read this graph. Time and sales is also very, very important because this shows you all the transactions that have just recently happened. So on a very, very high volume day, you're going to see this go up and down.